For ultra-high net worth families, estate planning can be one of the most critical and sometimes neglected parts of financial management. Without a clear plan, even well-intentioned families can face confusion, conflict, and unnecessary tax burdens. Here to help explain how thoughtful planning can prevent all of this, Elise Pulver, Principal of Wealth Planning at TD Wealth Family Office. It is lovely to have you here.
Thank you for having me.
Now, I should just mention from a standpoint of that you know what you're talking about. You've been doing this for 22 years.
I have been,
yeah.
yes.
So you've seen a lot of situations and know how to navigate them.
I hope so.
Yeah. Let me ask you, when you think about, just at a high level, just kind of set the table, the kinds of things that when one is drafting estate planning and considerations, what are the kinds of things people need to think about?
Okay, so I think at a high level, it's choosing the appropriate lawyer. Is that lawyer a tax planning lawyer, an estate planning lawyer? Do they have a little bit of both? That would be my initial consideration.
Okay.
Then I would move to the actual documents themselves.
Yeah.
Who are your executors? Who are your attorneys for property? Do you require multiple wills for probate planning? Do you have assets in another jurisdiction? Do you need to have another will in that other jurisdiction? Do you have liquidity to pay the taxable on death? There are so many things that clients should be thinking about before they even get into the actual drafting.
All right, I want to dig into pretty much every one of those.
Okay.
So let's start off with the lawyer. You mentioned that the lawyer should have tax side of things too. And let me ask, is this something that somebody might call a lawyer they've used for other things and bring them in and maybe they're just not qualified to do what they need to be done here?
So many lawyers say that they draft wills, and the same lawyer will say they can close your house, they can put together a shareholders agreement. I prefer a lawyer that focuses on estate planning, that has a strong tax foundation, understanding. So whether it is that they took an advanced tax planning course, whether they have their TEP designation, which is a designation given by the Society of Trust and Estate Practitioners, whether they've taken some sort of family enterprise training designation or course, something that gives them an edge rather than just being able to draft a will.
You mentioned as well that the types of wills people need to think about, and you and I were chatting before we even started, and sometimes this isn't a case of maybe getting an oversimplified answer to what you do, but some people just don't have wills at all.
Yeah. So the clients that I see, generally speaking, do have lawyers who have done proper wills. Maybe they're missing some clauses that I would want to see, but I have seen clients that haven't updated their will since the 80s, went to a lawyer who prepared a 5-page will for them. It's not up to par for the complexity of their estate.
And you're saying that for some of these estates, or for many of these estates, multiple wills and also alter ego trusts. Yeah.
Okay.
I will get into it, but tell me what the alter ego trust is.
Okay, so I just want to say I deal in the ultra high net worth segment.
Yeah.
So my clients are affluent, and they often have complex matters.
Yeah.
Okay, so alter ego trust, to get back to your question, and joint partner trust, these are trusts that you can set up when you're over 65. And they are known sometimes as will substitutes. So you put your assets into these trusts on a tax-deferred basis. You can retain control during your lifetime, but when you pass away, these trusts act as a will. Even with these trusts, I still recommend doing a will on the side for any assets that weren't put in, but some clients have these, again, just to substitute for a will.
Yeah. Now, and again, this is going to be situational, depends on the people, and what I'm hearing though is more than one will is needed for many of these situations. What though are the most critical clauses? You mentioned there's certain things you look for specifically.
Yeah.
What are they?
Okay, so the critical clauses I look for aren't necessarily the same for everyone. It really depends on the client. So when a client comes into my office and I look through their will, I often look for the post-mortem planning clause in their will. Almost all of our clients have a business or have shares of a private company. I want to make sure that those shares can be dealt with on death in a tax-efficient manner. Without the post-mortem planning power for the executors, it's unknown if they can actually undertake some certain reorganizations post-death in absence of the power. So I look for that. I look for the Family Law Act clause. And the Family Law Act in Ontario, and it's pretty consistent across the country, a gift received after marriage, so an inheritance, is excluded from net family property on marriage breakdown. So just by way of the legislation, anything you receive by inheritance is excluded. However, the income from that gift is not excluded. So in the will, we like to include a family law act clause that confirms that the actual gift is an inheritance that's excluded from net family property, as well as the income. So that's another clause that must be in a will. There's so many others.
Yeah.
I can get into. Yeah.
Well, I'm curious because I have a few written down here, and I'd love to understand a graduated rate estate. Yeah.
Okay. So the graduated rate estate is a concept that was put into the Income Tax Act, I believe, in 2016. It allows an estate to be administered for 36 months. And while it's being administered, all the income earned in the estate is taxed at graduated rates. So without that clause, sometimes you can still get the preferential rates, but we like to see the wording in the will that actually gives the executor the authority to prolong the estate administration period up to 36 months to take advantage of the rates.
I know each one of these is warranting like an hour explanation,
Yeah.
but just to give us a sense, business continuation powers.
Yeah, so that goes back a little bit to the postmortem planning,
Yeah.
but we really want to make sure that if a business, the business owner dies and there's no continuation clause in the will, what powers does the executor have to walk into that business and carry it on? So for an owner-operated business, we really want to see some of those real business-related clauses in the will.
And you say not a clause in the will. One thing to be very cognizant of is the choice of an executor.
Oh, absolutely. So I'm giving you the list of, the critical clauses or powers that I like to see in the will. But undoubtedly, choosing your executor, after choosing the lawyer, choosing the executor, I think would be most important. I believe that for the segment of clients that I deal with the complicated estates, a corporate executor who is a professional who does this day in and day out and has the consistency would be my number one choice. Lots of clients don't want a corporate executor or they don't want them doing it on their own. They don't know if it's personal enough. In that case, I suggest using a trusted family member along with the corporate executor. So you can balance out the professional and the personal aspects.
And have that lack of bias in there too.
Absolutely.
They do it all the time.
Yeah.
I didn't mention as well too that within the will, one of the clauses that's important, you talk about the definition of personal articles.
Yeah. A lot has been written on the definition of personal articles and effects, and they do need to be compared to personal property. So personal property is anything you own, but personal articles and effects, I often say if you turn your house upside down, everything that falls out would be your personal articles and effects. But some clients feel that their personal articles and effects are more than just that. So their record collection, their vinyl collection, their wine collection. I've been reading lately Pokemon collections, Beanie Babies from.
Yeah.
Are they personal articles that can be dealt with in that clause, which oftentimes the executors have discretion how to deal with, or are those investments? Are they investments that, for example, for a wine collection, did the deceased, what was their intent? Was their intent to have the wine to drink and enjoy, or was their intent for the wine to grow in value and form part of the residue of the estate? It's really important to decipher the intent of the actual article and whether it's in the personal articles and effects clause or in the residue.
I wanted to ask a bit more, I guess, whether those personal articles or whether they morph into a different category when you have valuable collections. I mean, and when you think about, art and antiques and jewelry and, it's the same but perhaps different. What has been your experience in dealing with this and some of the optimal ways and maybe some of the less optimal ways?
So I've seen a lot of collections over the years where the children don't want them, whether it be art collections, jewelry collections, antiques. And so the executors are tasked with dealing with these. So oftentimes we say to clients, if you know that your children are not going to want them, let's put these specific articles in another will. We'll call it a third will. So we usually have, for these clients that do probate planning, a primary will, that's a will that's submitted for probate. A secondary will that deals with shares of private companies, interests in partnerships, unsecured debt, the list goes on, and personal articles and effects. However, for the clients with collections that might have to be auctioned or gifted to a museum, we will put those in another will. And the reason we put them in another will is if the person receiving them or the institution asks for the executor's authority, we're going to have to probate that third will. We don't want to probate the second will because everything else was in the non-probatable will.
Right. Interesting. So a lot to think about, but one thing we have not talked about is the fact that, what if the assets are outside of Canadian borders? Then what happens?
Okay. A lot of our clients are global citizens. They have assets all over the world. Now, I think just for the purposes of this conversation, let's talk about people who are snowbirds, spend time in the US, whether it be Florida, Arizona, California. They oftentimes have real estate there that has to be dealt with on death with a will. They certainly can use the will that they drafted in Ontario, but then you have the problem that you have to get, and I'm speaking in Ontario because this is where I practice, but you have to get the will resealed in that jurisdiction. And they often want the original will, which we would have to send across the border, the probated will here. It leads to complications. So I often recommend that they have a will prepared in the jurisdiction where the asset is located, with the strong caveat that the lawyer who drafts the U.S. will coordinate with the lawyer that drafted the will in Canada or Ontario, wherever it is, to ensure that they work together and that they don't revoke one another.
Yeah, that's and I've heard stories about that. Can I ask you, for someone who's listening right now, maybe they've got some of this done, maybe they have none of this done, they know they need to start, where do they start?
I would say they start by talking to a lawyer that really can understand what the client's intentions are, their goals, their values, the type of legacy they want to leave. And from there, the conversation should just naturally dovetail into what you see in the will. So I give the example that, boilerplate wills that have trusts that are just set up for children, because that's what they do for everybody, doesn't necessarily work for every child. Some children are married and they do want the protection of a trust. Other children are just gonna take their inheritance, use it right away, and the trust doesn't make sense. So I prefer sending my clients to a lawyer that can have that real in-depth conversation and get to know what the client's intentions are and work towards a tax-efficient strategy for passing on their legacy.
Well, it's great having this conversation with you, Lise. Thanks very much.
Thank you.